Bitcoin getting crushed again. It is
As a
now
result,
off
the shape of the
16%
economy from last
since
year's
hitting
extraordinary
all-time highs
lockdown
earlier this
and
month.
autumn
But
recovery
the bank
looks a
also
little
pointed
like this,
to
with
tens
right now a
of billions
further
of pounds
fall,
in extra
but not quite
savings
as
by
historic as
households
last
who
year.
have not been
And
able
then
to
a
spend,
sharp
but
rebound
at some point
in
could be
September,
unleashed.
growing
Another
by
much needed shot in the arm.
Assalamu alaikum, and welcome to another episode of Focus on Finance. In today's episode, we are talking about banking. Joining me in the studio once again, Mr. Shahid Ulash. Assalamu alaikum.
Wa alaikum salam, Shafique Sahib. Pleased to be here.
And Shahid, as our viewers will know, is an accountant by profession, the managing director of a management company based in Mauritius, and the chairman of Mauritius Finance. Earlier, we asked some members of the public about banking and their views on what banking is about and what banks do. Let's hear what they had to say.
I think a bank is important to keep money safe. If somebody keeps their money at home, is probably going to be in danger from robbers and all this, and to keep basically stability in society, I believe. Yeah.
Pour lui assurer que l'argent va bien circuler, l'argent secure.
Et la banque, c'est une institution côté monétaire. Et son main function, c'est deal avec finance. Donc, nous connaissons la banque comme si nous faisons un savings, ils donnent nous loan.
Nous avons l'idée comment l'argent est dans le pays. Voilà.
Ben, la banque, moi je connais deal avec l'argent, ils vont mettre l'argent dedans, quand j'ai l'argent, quand j'ai un saving, l'argent je gagne, j'ai salaire, voilà, je investe pour la banque direct.
Et la banque, c'est une place que tu peux avoir une financial aid pour les gens ou même place où les gens peuvent faire des savings. Ils acceptent chaque dépôt, cash, et ils peuvent faire un changement les autres currencies. Ils proposent une safety pour certaines personnes, même pas le business. Tout ça.
De nos jours, une banque, c'est pour beaucoup de choses. Un loan, un SMI qui veut ouvrir ses portes, un étudiant qui veut aller dans un autre pays. Donc, tu as la banque, tu prends un loan, tu essaies de guetter, tu signes là, tu as la banque. Ouais, voilà.
Il est essentiel dans une société maintenant, parce que c'est une business, c'est une case, construire une maison et acheter une voiture même. Des fois, il n'est pas évident, mais avec un loan, c'est arrivé accomplir une grande chose. Et même un business, de commencer le business sans fonds. Et après, quand les fonds viennent, tu es capable de rembourser aussi.
So, some interesting comments on what banks are and what banking is about. So, Shahid, what is banking?
Well, banking is the business of protecting money for others. Banks lend money, generating interest, and that creates profit for banks and its customers. A bank is a financial institution that's licensed to accept deposit and make loans, but they also may perform other financial services.
So you mentioned quite early on in the definition, interest. So do all banks operate in the context of having to pay and charge interest?
We need to differentiate between the Islamic banking side and basically the traditional banking side. The Islamic banking side basically bears no interest or riba, but the traditional banking side bases entire system on interest.
So interest, if you remove interest from banking, is there still a role for banks and banking in the Islamic environment?
Absolutely. I mean, the basis of Islamic banking is about taking risk together with basically the persons using the funds and sharing the risk and sharing the rewards. I think the concept of partnership is much more prevalent in Islamic banking than it is in the bank. If you take a traditional banking environment, basically the interest has no bearing on whether the company is making a profit or loss. So the person taking the loan has the ability to repay, right? There is a screening, but let's say for some reason the person loses his job, he will still have an obligation to pay the loan. So clearly, the Islamic system is a system that's more based on a fairness and partnership approach, whereas if you take the traditional banking, it's basically money creating money via interest.
And we covered this in an earlier episode where Allah says in the Holy Quran that eventually interest and the whole interest-bearing economic system will be destroyed, and we'll come to a new economic system. But that is to come.
Yeah.
So we operate in a world where there is interest and there are banks.
Absolutely.
So I think it'll be useful in this program to go over, again, maybe in detail, step by step, the functions that banks provide, and then come to the different types of banks. So let's go again through what service a bank provides people.
I think if you look at the bank, typically speaking, there are a number of things that they do. Firstly, they provide security for the cash against theft. So when you're putting your money in the bank vault, it's probably one of the safest places where you're keeping your money, right? That type of risk will not be the same with an individual, because if you're keeping money at your house, there's the risk of theft is much higher. Mm-hmm. Secondly, monies in banks are typically subject to insurance. So let's say in the event there is a theft, there will be a guarantee on the money that has been lost, because basically the banks will take an insurance on their own deposits to ensure that if there's a theft, that money is recouped from insurance. Thirdly, the convenience side. So banks have a lot of services, including what we call credit or debit cards. So let's say people are traveling, they don't have to hold cash with them. They can use their banking cards to access funds overseas, internationally. And more recently, with the advent of e-commerce, they can actually settle a lot of the transactions via their cards on the various platforms. And the last aspect that banks typically do, they offer investment products that allow people to invest their money into different types of products and actually grow their wealth. Typically speaking, you have funds that invest into growing companies. There are funds that are investing into listed companies and so on. And you typically put your money there and buy and hold and sit on the money for like X number of years. Mm-hmm. And very often you would get a more decent return that you're just having sitting on cash in the bank account.
So I think members of the public and our viewers can relate to banks. We would, those working and having money, would pay money into bank accounts, I think. And we could relate to the security. Interesting that you mentioned safety of the money. We had another program on what is money and the nature. I think a future program in this series will be on the new forms of money, cryptocurrency. But that's something to look forward to. But sticking with banking, coming back to banking, are there different types of banks?
I think if you look at the banking environment, it will be governed by the central bank. So the banking industry itself, there will be a central bank that's basically the government bank, which basically sets the rule and framework on the types of business that you do within the banking industry. And that's the regulator. Then below the regulator, they would have different type of licensors, people who take licenses to operate the banking business. So the most common one would be the retail or consumer banks. Basically, they just offer services to the wider public. Then you get to the next level, which is credit unions. Their role is typically, it works like a bank, but their role is just to provide a profit to their members. So credit unions, basically, they come together and they provide a good service and a more profitable banking situation for their members. You also have saving and loan associations, which their role is basically to bring people together with a view to helping them own their own house and help them with their mortgage. Then you have the typical commercial banks, and these are standalone institutions within a bank who basically just do transactions, right? They will basically they tend to specialize into financial products and tailor-made type of products for large corporates and entities. You have community development banks. There are smaller commercial banks that are much more focused on the specific communities. And then you have investment banks, which are basically I would say the biggest revenue earners in the banking industry. So what they do, they will provide complex financial transactions to clients. You've heard of probably securitization, which basically is creating a value. So taking a financial transaction, breaking it down into subparts and then selling it to people. So creating an investment product out of a financial transaction, right? And they offer basically services to corporations, to large non-profit organizations, pension funds, governments, and their services, they also act as intermediaries in very large merger and acquisition transactions where they provide financial support on the side of the buyer or the seller. They provide due diligence services. They provide transaction advisory. So it is a very complex business. And because of the complexity and the nature of the business, it is one of typically the highest revenue earners in very large international banks. And then the last one, the more, I would say, recent type of bank would be the online banks, the internet banks, as you call it. And those banks, basically, they don't exist as in a showroom or as a traditional banks, but they have a platform where they allow people to do banking online, and they predominantly exist online only. And that allows, movement of funds, across countries and so on. But they're predominantly an online platform for banking.
So I think, our viewers may be surprised by the number of banks. I think for most of us, we would think the bank would be our high street banks, which you call these were not commercial banks, but retail banks.
Retail and consumer banks. Yeah.
So these are when the man in the street would pay their salary, get a loan if needed be, car loan or house loan, savings. We had as I said, in a previous program, we talked about the creation of money by banks. Perhaps you could expand a bit more on that.
Absolutely. So what happens in banks is basically the way they operate is as follows. Let's say they receive a certain amount for deposit, right? That would sit in their bank accounts, and they obviously have a guarantee behind that. But then, based on the deposits that they've received, they have the ability to create loans, and they provide loans to clients. So typically speaking, let's say they receive 100 in terms of deposits. They may create up to 1,000 in terms of 900 in terms of loans. What that typically means is they can actually create. They would keep that 100 in their books, but that gives them a guarantee of a minimum funding on their books, and then because they have 10, they can create 9 times more of the amount that they've already got. And then they would go and create loans and provide to people. So long people are taking loans, and that's very important to understand. So long people are taking loans, the bank will have the value of the loan on its books. The moment the people repay their loans, right, this amount just disappears into the books, and the only amount that remains is the interest profit that they made. Mm-hmm. So it's important to understand that the money actually doesn't exist, but the bank creates that loan and gives it to people. People will use that loan that they've received, make payments to other parties, and then they will repay the loan to the bank, right? And the bank basically it's going to be a book entry at the bank level, but the only actual amount that they receive is the interest in terms of the amount. So it's all for all intents and purposes. Once the transaction has, let's say all the loans have been repaid, the bank started with 100, it would have received, let's say, 10 or 12% interest, let's say 10% interest on the 900 loan. So the net position of the bank after the repayment of the loans after a year would have been 109 basically. So 10% of 110, right? Mm-hmm. 190, because 10% interest on 900, so it's going to be 190. So it's almost double the value of the deposits just by having 100 deposits. Mm-hmm. So it's created a 90 in terms of value for the bank, and also obviously shareholders buy interest.
Which is interesting. I think it's a lot of people are not aware of this fact that when issuing a loan, it's creating money as opposed to taking money from what's that already is in the bank. The misconception that most people have is the money that's deposited by savers is the money that is lent out. If you don't have money in the bank, you can't lend the money. But what you're saying is, and I've read this too, that when they issue the loan, the money doesn't exist. The fact that they've written a loan, they have created this money. And the Bank of England had to issue a paper, I think a few years ago, that says in the UK, for example, which is typical in the West, all the money in circulation, only 3% was created by the government that was printed. 97% was banks issuing loans. And the problem is that when everyone repays their loan, the money supply, the money in circulation reduces, which is it defies logic. And then now you're earning interest on money that didn't exist. So where that comes from, this is another mystery. But basically, those are earning interest on something that didn't exist. Somebody has to go out and work and earn money to pay that interest.
Absolutely. And I think that's the principle which Islamic banking basically goes, moves away from. Basically, you need to, the concept of partnership in Islamic banking makes that you need to have real activity to generate revenue and generate profits. Whereas in the creation of a loan, the bank takes zero risk on the loan because the loan typically is guaranteed and the interest basically has to be made. Because the bank typically would take a security and let's say, which would typically be more than the loan that they've given. And if ever the loan is not repaid, they will enforce the security. Very often it's houses of people that they will just sell, realize whatever value they need, and they have absolutely no co-ops in selling it at a discount just to realize that value that they need, and they get the interest and then just get out of it. And some people end up homeless just because they've taken a loan. I think there's a stark difference between the Islamic banking concept and the traditional banking.
And it comes down to interest. So, but as we said, we can have banking without interest. The central bank, as you said, it's the regulator, and they will be the ones who are producing government money initially. And I think in economics, there's government money and bank money or loan money that we were talking about. But a recent development is cryptocurrency, Bitcoin, digital currencies. We will have another program on that specific. But there are moves even in Mauritius for government to issue digital currency.
Yeah.
And this, if that is issued direct to the public, doesn't that do away with the need for retail banks if you have digital currency direct to the public?
Absolutely. I think what that does is just remove the intermediation that currently commercial banks have basically the role that commercial banks have fulfilled and retail banks have fulfilled over the years. The interesting part is that given that that would be issued on a blockchain technology, the validation of the transaction doesn't need to happen by a bank because the system validation is good enough to ensure that the transactions are safe and are properly recorded. So that's an interesting space to follow on how banks will follow suit to adopt that new business model. But we don't expect that to be a massive change immediately. But over the next, I would say, few years, we will see changes in patterns of consumption. We just take a couple of years back before the pandemic, the volume of online trading was relatively low to what it is today, right? And we've seen that volume growing exponentially over the past couple of years because people will no more go out and they will just basically sit at home and order everything and anything online. That was one specific event that shifted consumer behavior. We would expect that to happen over time with cryptocurrency. But again, there may be some specific events that happen that just accelerate the process. So we don't know what the future is made of, but clearly this is going to be a very bold move by the government, the central bank, and that will basically bring a change to how traditional banking has been conducting its business over the past few years or decades.
Yeah, so that will be an interesting thing to watch.
Yeah.
As I said, in a future program, we'll go into what is a blockchain and cryptocurrency. So we've covered the different types of banks, but in the retail banking, our interaction with banks, different services are provided.
Yeah.
Perhaps if we can go through the different types of accounts and other services that we can get from a commercial, a retail bank, and some explanations of what each is.
So you have typically you have what we call current accounts and saving accounts. That will be the most used accounts, I would say, in the retail banking space. So current accounts, basically accounts where you can actually make payments and you can issue checks against those accounts. Although the use of checks is getting more and more, I would say, redundant these days with online payments. But yeah, the current account has been predominantly used for issuing checks and doing transaction banking. And then there's a savings account, which basically people keep their savings into those accounts and don't do regular transactions. They still can do some payments out of the transaction, but these accounts typically bear interest in terms of the returns that you can get there. Plus, there is a deposit account, which basically this one, which is called fixed deposit account, and those accounts basically you would block your money for a certain period of time, where you would get more interest on the amount that you put there. Then there will be money market accounts, right? Which tend to have a higher interest rate. But there is an element of risk that sits in those type of accounts where you have to move your money quite regularly and get exposure to different types of assets.
But from an Islamic perspective, if it's paying interest, this is not allowed around for Muslims.
I think from an Islamic perspective, as a Muslim, we are not allowed to accept riba, right? And we technically shouldn't be getting riba. But unfortunately, the reality is there will be situations where you would be exposed to paying interest because of how the system works, but where you can avoid it, you should be avoiding it.
Understood.
Right. And you have loan accounts, you can have debit cards, credit cards. Debit cards basically is linked to your savings account, where you're paying via a card to get the money out, but it's an electronic payment. Credit cards basically is more interesting because you are not paying the money that you have. Basically, it's the bank paying for you, but you have to repay that money before a certain date. If you don't do that, basically the interest is literally punitive. So we're talking about literally, in some cases, 2% per year compounded, which basically would be much more than 24% at the end of the year. So it's a very high interest rate, but people just don't realize because they put in the amount and they may have small amounts on their credit card, but what they end up paying in terms of interest is very, very high. So it's important to whatever financial instrument or whatever account you're using to understand why you're using it and why you need this account. I think that's critical.
I think, yes, it's worth understanding that the banking system is within an interest environment, but as Muslims, as Ahmadis, we do not need to, we can use the tool, but we do not participate in the interest.
Absolutely.
The Jamaat uses bank accounts, us all have to use bank accounts, but we do not actively go for interest. If we get it, there is a system within the Jamaat how to use that, what it's permissible to use. And we covered that in earlier programs. So the function of banking is clear that it serves a useful function, but there are Islamic alternatives. We're coming to the end of our program, so we've covered what are banks and the different types. I have some questions that our viewers of Focus on Finance have submitted. I think some of them we've already covered. One asked from Mauritius, what are the different types of accounts and which one should I go for? I think we've covered the various types. I think current account is where you make transactions. If you have a savings account, that there normally typically has interest bearing. So we should try and avoid that. But if you do get interest, there are permissible ways to use it. Under the Islamic Jamaat system, we're not allowed to use interest. But if you earn interest, you can pay it to the Jamaat, and they will use that for the propagation of Islam. I have an interesting one here from, again from Mauritius. Why, when I place money in the bank, they do not return me the same amount that I placed there? And he has a specific example. He said, I deposited 10,000 rupees 3 years ago, and when I wanted the money back, they said, I can only get 9,000 back. So on the positive side, he hasn't earned interest. But why is after 3 years his money in the bank, where it should be safe, he is only getting less, 90% back?
I think we need to look at it as a whole, right? Banks basically, now they're regulated and they need to conduct reviews on accounts. Although there's no movement on an account, they still need to do reviews. So there's a cost associated to that and they will pass it on to the customer. So in that specific case, the money has been sitting there for 3 years. There has been no transaction on the account. So basically they have to go and start looking at the history of the account, who set up the account, why was the account set up, and basically why they need to do all of that, why they need to keep the account. So they have to discuss whether the account is worth keeping, or they'll tell the guys, come take your money and go. So there's a process and a time that they spend around the accounts, and that cost that they actually spend on this account is what they will charge off to the client. And that's why probably the 10,000 rupees has come to 9,000 rupees. This being said, if the interest, they may have received interest also, but the interest was so low and the cost was so high, that's the reason why probably they will just receive 9,000 rupees. And again, you will need to go in the details of the accounts. But what's also important is that some banks do offer this service, especially for long-standing clients, for free. So you may want to discuss with your banker to understand what's in it in terms of the fees. Okay, say, okay, we're going to keep that money 3 years, we're going to sit on that money, or 2 years, we're not going to use that money, but basically this is what's going to stay. So we can agree that there will be no fees charged. And I'm pretty sure in that case that you just mentioned, if that person went and argued with the bank, most probably they would have got the money entirely out, because very often banks just apply automated rules to accounts, and the bank managers would have discretion on waiving certain fees, and you can actually get your money out. So I think this is something that can be discussed with bankers.
So in short, basically, the bank has been taking money from the deposit in terms of charges, and that has reduced it. Again, our time has flown by. Once again, we come to the end of this episode of Focus on Finance. Jazakumullah again, Shahid, for your enlightened viewpoints and explanations on banking and the various types of banks. Thank you for your participation and your viewing, and I hope to see you again in the next episode of Focus on Finance. Assalamu alaikum.